The Middle East stands at a critical tipping point as geopolitical tensions reach a fever pitch, threatening to reshape the global landscape in unpredictable ways. The complex web of conflict involving Iran, Israel, and the United States has heightened fears of a broader, more devastating regional war. Military activity is intensifying, with strategic assets being deployed across the region in a display of power and tactical readiness. Carrier strike groups are positioned in international waters, with fighter jets taking off into the hazy morning sky to maintain a state of high alert. Strategic energy infrastructure, the lifeblood of the global economy, now faces the direct threat of military strikes and sabotage. The vulnerability of these installations has cast a shadow over the stability of energy supplies, causing ripples of concern throughout the international community. Beyond the strategic maneuvers, the human cost is mounting. Displaced families are forced to flee their homes, seeking safety in temporary shelters. The humanitarian crisis is deepening across the parched landscapes, highlighting the tragic reality of those caught in the crossfire of geopolitical ambition. At international summits, world leaders are urgently calling for a ceasefire, recognizing the potential for a catastrophic global escalation. Diplomatic efforts are being fast-tracked, but the path to peace remains elusive as the drums of war continue to beat in the region. The energy markets reacted instantly to the instability. Crude oil prices have surged past the $100 a barrel mark in record time. This sudden spike has sparked fears of a sustained energy crisis, potentially stalling global recovery and driving up the cost of production. In the Strait of Hormuz, a vital artery for the world's oil trade, tankers must now navigate under the shadow of heavy naval escorts. The extreme vulnerability of these maritime trade routes means that any further disruption could lead to a global supply shock. These price hikes are already being felt at the pump. Across the globe, gas stations are updating their price boards daily. Average consumers are left to grapple with rapidly rising fuel costs, which are eating into household budgets and limiting discretionary spending. Supply chain disruptions are no longer a theoretical risk. Pipeline shutdowns and maintenance delays are becoming a harsh reality. Under the constant threat of conflict, the physical flow of essential energy resources is being restricted, further tightening the global market. Economic data confirms the trend. We are seeing a sharp, unrelenting rise in global energy costs across all sectors. This trend is forcing nations to reconsider their economic forecasts for the year, as inflation targets become increasingly difficult to meet. The pressure is palpable on every city street. People are watching inflation erode their purchasing power as prices for basic goods rise. The psychological impact of economic uncertainty is widespread, leading to a climate of caution and reduced consumer confidence globally. Inside central banks, policymakers are meeting in emergency sessions, weighing difficult decisions to adjust interest rates and stabilize markets. The struggle to balance growth with the need to curb inflation is becoming a defining challenge for global financial institutions. On the world's trading floors, investors are navigating a sea of volatility, reacting to every headline from the Middle East. This cautious sentiment reflects a growing fear that a sustained conflict could eventually trigger a global recession. Industrial production is also showing signs of a slowdown. The gears of global trade are grinding slower as uncertainty takes its toll. International ports, once bustling with activity, are experiencing delays as shipping routes become riskier and more expensive to navigate. As we look at the map of global tension, the stakes for the world economy have never been higher. The intersection of regional conflict and global economy remains a critical challenge that will define the coming months.